welcome to my video. I'll trust you'll find it helpful and informative. Please remember to like and subscribe. Thank you.
Good morning, guys. In this video, I'm going to look at cost and management accounting sample assignment 3, question 3, that is contract accounting. And the only thing I've done on the first page of the spreadsheet is that I have taken the information as it is normally given and I've put it in the spreadsheet so that we can just move the numbers around with more ease. So let's start, like always, by looking at the given information first. So things that you are given, you know when your year end is. In this case, it happens to be 31 October 2024. You are given a start date for your contract, and that is 1 December 2024. That's not possible. So let me quickly change that, guys. You cannot have that start date in the future. So obviously that was 1 December 2023. So, and then your completion date is the 31st of October 2025. So you still have an entire year to go on this contract. And then the first thing that they give you is they say these are the cost and revenues extracted from the trial balance. And they give you several cost factors there, and then 2 revenues. Now you see that I put a strike through the last one. I'm going to explain to you why I did that now. We're just looking at the given information. Then they give you other information that's relevant to the contract, the cost of the used materials on site, estimated value of the plant on site, cost of materials that were sold because it was considered unsuitable, the cost of the work completed but not certified, the contract price, and the value of the plant at completion. And then they give you a third set of given information, and this is where they say the following costs are estimated in order to complete the contract. So, and then what are you required to do? Well, they say the first thing you must do is calculate the amount of profit that can be credited on 31 October. In other words, now when you have your year end, that is where they tell us when the contract will be completed. They say that there is a provision for contingencies and that the profit is taken to book based on the cost completion method. So you're not only bringing it in at the end of the period, you're bringing it in to the books at the end of each financial year. And then the second thing they ask you to do is to prepare the contract account for the year ended 31 October 2024. Now, what's happening in this case, I say to you, this information is extracted from the trial balance. Okay? But before we can answer this part, calculate the amount of profit, we have to re-establish the general ledger that this information was received from. Okay, because now, I mean, obviously that was part of your trial balance and you have this info, but you need to rearrange or recreate that general ledger that that was used to get this information before you can get to the estimated profit. And then after that, you are able to prepare the contract account for the year ended 31 October 2024. I'm going to explain to you exactly just now why there are different colors here. But I just want you to realize here is that the general ledger, the first thing that we are going to do, this is part of your, or at least part of the information that you used to compile your financial statements. Okay. So this is historical information. It is part of your financial statements, as I already said. When it comes to the estimated profit and the work in process account, the contract account, these are not part of your financial statements, guys. These are part of your management accounts, because the managers who are managing this account wants to know what's our estimated profit, okay, and how are we doing on this contract. The shareholders need to see what happened so far. And so just, and I think if you realize that you are preparing two documents for two different audiences, it will already help you a tremendous lot. So now let's just have a look. Everything that is marked in green, and I'm now assuming again that you are going into the exam with a highlighter. So everything that's marked in green here are costs that will reflect in your general ledger. The materials, the wages, the salaries, the consumables, the head office charges, the warehousing and insurance, and the plant. All of those are cost. And all the blue, so all these costs will then obviously be debited in your general ledger. Then you have certain revenues and other information that will be credited in your general ledger. That is the cash received. That is the cost of the unused materials on site. Why? Because there, on the debit side, you're going to account for the materials that you've already bought. But on the credit side, you're going to say, well, there's unused material, so I haven't used all. Same with the plant. We've paid 970,000 for the plant, but there's still value. The plant as it is on site still has value, so you have to credit that. Then, and now I'm going to explain this. Here is the cost of the material sold because it was considered unsuitable. Now, what you need to understand, that material cost that's mentioned there and the cost of the unused materials here is at cost price. We are not in the business, or this company is not in the business of buying and selling building materials. It just uses it in the normal course of operation. So the fact that it was sold for 26,561, while its cost price was only 19,921, just means that on this sale, we found we couldn't use it. And so we decided to sell it. And lo and behold, we are able to make a 7,000 profit on it. But this 7,000 profit does not form part of this contract. We will account for that somewhere else. And so that is why you can simply strike or draw a line through the sales of materials that were unsuitable. Because the amount that you're going to use is not this 26,000, it will be this 19,921. And then you have cost of work that is completed but not certified. So you're going to show that as well, because it's completed but it's not certified, but really it's an income. So you're going to show that on the credit side of your general ledger. Then you will see that there's also things that I marked out for you, or that I put in yellow. It's supposed to be yellow. If it doesn't look yellow, forgive me. It's supposed to be yellow. So, and these are the things that you are going to use in when you are calculating the estimated profit. Okay. And then you're going to use most of the information that was in your GL. You're going to use in this, what do we call it, the work in process contract. But you will also put in some of the information that you got from your estimated profit into there. So the first part of your work in progress account will look exactly like your GL. Because you are in your work in process account, what you are doing is you are considering both the historical or what happened historically, which is reflected in your GL, as well as your estimations. And so the first part of your work in progress account will look exactly like your GL, but there will be other things on it that you will add. And I'm going to show you exactly how that works now. So first thing we're going to do is complete our general ledger. The work in process on the contract number, you will be given the contract number, you can just put it in. Okay. The materials, the wages, the salaries, the consumables, the head office, the warehousing, and the plant. Let me just, I see there's a little, oh, that didn't work. Okay, I just wanted that warehousing and insurance to feature properly there. Okay, so all of these things is given. It's the green that you've marked out, and I've just pasted it like that. And on the credit side, I've taken the stock of the materials, the value of the plant and the materials sold. I'm using the 19,000. Okay. Then when I add them up, I get to an amount of 2.451 million on the debit side, and something less obviously will be on the credit side. But that cannot happen because this is a GL. So what I need to do is whatever side is the most, obviously in this case the debit side, I'm going to copy that amount here to the credit side, and then I'm going to calculate my first balance. I've called it balance one. Okay, which is just this amount, the 2451 minus these income or receivables that we have on this side, and then my first balance is 168938. Okay, then we have to add something on the GL. That things that we are now considering here is the value of the work certified, as well as the work completed that was not certified. Okay, now as with regard to the value of the work certified, what do we know? They told us how much money we received, but they say only 80% of this is certified as complete. So what we're going to do here for value, because now it's the value of the work certified, we take the cash received and we divide it by the percentage that is certified, which is 80%. And if we do that, then you will see there the little formula shows we get an amount of 3562770. Okay. Then we were also given work that was completed but was not certified yet. And that's to the tune of 81,000. So if we add the 3.5 million to the 81,000, we get 3644492, 497 in this case. Okay, and this is now obviously more than that balance we had there, the one that we brought in here, the 16886. So now we have to create a second balance that we are bringing down to the next year. And so in this case, now you're not adding that as well. You're only adding the value of the work certified and not certified. You get to a total. You bring that total over to the debit side, and then you calculate the difference between balance one that you carry down there and the new balance that you are bringing forward, and what the total here, and then you get a new balance here that you're bringing forward there and bringing down here, and that is 1.957 million. And then, guys, you are done with your general ledger. Now, once you've done that, you can calculate the estimated profit. So how do we do that? Okay. Here we say the cost of the contract to date is balance one. That is why you had to complete the GL first, to get to this balance one. You're taking balance one and you're putting that as the first thing of the cost of the contract to date. Okay. Then there are additional costs. And the additional costs are the materials that's brought down, the plant that's brought down. Where do I get those amounts from? Okay. It is given here. The cost of the unused material, the estimated value, all of those things we put in our estimated profit when we are calculating our estimated profit. We're also including the estimated. So these are the two that's brought down. Why? Because it actually still has value. Okay, so we bring them down, and then now we're looking at all those other estimations. Now, what I think I did something wrong here, because in the given information, when I looked at the estimations, they were in yellow, né, and not in green. So let me just go here and say that all of these were actually yellows. Sorry, give me. Let me say those are yellows. And even these are yellows because remember what I said to you in the beginning with the given info is that these things we will use when we are calculating the estimated profit as well. Okay, so now let's have a look at it. So we take all these estimations. We also have the provision. We now add the provisions in here for the contingencies. That is where we add it. And then we subtract the plant remaining. Now, where did I get that from? The 266. Here it is, value of plant on site at completion. So it's there. Okay. Just go and look what everything goes into your estimated profit. Then we get to our estimated final cost. Okay. Why are we subtracting the plant remaining? Because possibly we made a deal with somebody that once we are finished this job or this contract, they will come in and they will take over the remaining plant. So that's a deal that is settled, and so we have to subtract the plant remaining, and so we get to the estimated final cost. Okay, and the contract price is 5107. That was also given to us. So if we have an estimated final cost and we have the contract price, then we can get to our estimated total profit. It's not too bad. On a contract of 5.1 million, our estimated total profit is almost 600,000. So it's a little more than 10%, 10.5%. Okay. But what we also need to know is that part of this profit that we are expecting was already taken into the income statement. Okay, let me show you. No, sorry, that is, I'm going to show you how to do that now. So here we say, what is the profit that's taken into the income statement? So there's a little calculation here. It is the estimated profit. Okay, there we have our estimated profit multiplied by the cost to date. Okay, we have the cost to date. That is why we did our GL to get to balance 1. And then we multiply those and then we divide it by the estimated final cost. Lost. Okay. So let me just, yeah, that is better. So that we can see everything. So there we have the estimated divided by the estimated final cost. So we have the estimated profit, we have the cost to date, and we have the estimated final cost. There we have. So we have all of those three. And when we have that, we can calculate the profit taken into the income statement. And that is the 218657 that we've calculated there. We also have to put in this provision. And the provision, we are not told why we decided on this amount for the provision, but sorry, guys. So the provision you can also calculate, and that is the work certified. So we know what our work certified is. That's the 3562. But you will see here that it is, you get that information from your GL, where you've calculated it. Okay. So that's the work certified minus the cash paid, divided again by the work certified, and that you are going to multiply by the profit that you took into the income statement. Okay, so you have your work certified from the GL, you have your cash paid from the given information, and you've just calculated the profit to be taken into the account. So when you do look at the provision, it is this, and there I've showed you. So it is GL, General Ledger H11. Then we have the given info, and then the information from the General Ledger online 20. 8. That's not possible. Let me just see here. Oh no, H11, sorry, R11 times B28. So you calculate that. Now you have done everything that was required here in 3.1. Calculate the amount of profit that can be credited. Well, you already did that. And now you have to look at your estimated. Now you can, sorry guys, now you can move on to your work in process on the contract. Okay, because you've now completed this part. Now, like I already said to you, what you should expect is that the first part of your work in process account will look exactly like your GL. Okay, so that part there. So everything that we have, that we debited here, and everything that we credited here, you will see that in your work in process contract account, which is a management account. I remember you again. So see, no difference. Okay, up to there. So you can just copy everything that you had in the GL, you can put it there. But now, when you have those two totals, no, you already, another thing that you're going to repeat from the GL is the value of the work certified and the value that is completed but not certified. So you're going to put all of that in. And so it's not a surprise you that everything here so far on your credit side will look exactly like your credit side looked on your GL. There's no difference. Okay. Almost, almost thought I saw a difference there and got a fright. Okay. But now something else will happen. Now you will have a higher value here on the credit side. So you will take that same amount to the debit side. You already have that balance that you brought down there. That's still the same as from the GL, although you're not looking at that balance 2 now, you're only looking at balance 1. And then you are going to say, okay, let me add the profit that was booked and the profit that was taken and the provision that I took. So the profit booked, where do I get the profit booked from? Well, you calculate, it was given there as your estimated profit in B25. So that is what you've calculated there. Okay. And then your provision was calculated also here. Okay, so that is why you do those two calculations, so that you can bring it into your work in process account. So you say, okay, on this side, there is a 3644, 3.6 million. That's clearly the higher amount. I'm bringing that to the debit side. So if I take the balance and I take the profit booked and I take the provision taken and I subtract all three these amounts from the total, then I should be able to get a new balancing amount. And that's exactly what happened. You have D15 there minus D11, which is the balance that you brought forward, minus the profit that you booked, minus the provision. Let me just show you that again. Okay. And that is how you get to that balance of 1738. And that is the balance that you then bring down on the credit side of your work in process on the contract account. Okay, so I think that what you need to realize is as we are doing the work, there are different balancing amounts. So the first thing that we are going to do, we just here in the GL have a debit and a credit side. The debit side is clearly more, so we have a first balancing amount there that we bring down here. Okay, but that balancing amount that we bring down here will still be less than the total of the value of work certified and the work completed not certified. And so we have to bring in a second balancing amount, and that is the balance that we bring down in the general ledger. Then when we go to our estimated profit, okay, we now look at all those other things that's estimated, because it's a management account that we are preparing it for. So, and all of these estimations, guys, if it is a cost, if it is a cost estimation, then you will estimate it a little on the high side. If it is an income estimation like the plant remaining, you will be a little more conservative, because you don't want to be caught with your pants down, and in the end find that you're not making the profit that you want to make. And then in your work in process, you are repeating everything that was in your GL up to there. Okay, so everything on the credit side of the GL is repeated. And the only difference is now you will look at that amount, you will bring it to the debit side, you will look at your balance one, okay, which is the same obviously in your GL and in this account. You will bring in the two things that you calculated in the estimated profit, which was the provision and the profit taken to book. You will add those, and then you will get a second balance, or third balance rather, balance number 3, when you take these totals and you subtract those 3 amounts, and that is what you bring into your work in process on the contract. Thank you for watching this video to the end. If you found it valuable, please subscribe and like. Thank you.